Nvidia just lost $800 billion in market value. Microsoft is down 7% this week. And Wall Street's fear gauges just hit levels we haven't seen since the tariff crisis. If you've got money in tech stocks right now, you need to hear this. Here's what nobody's talking about. While the AI hype train is crashing, there's actually a massive opportunity hiding in plain sight. But first, you need to understand what's really happening with your portfolio right now, because the market just flashed 5 warning signs that the Wall Street pros are reacting to. And by the end of this video, you'll know exactly how to protect your money and maybe even profit. Let's start with the biggest stock in the world right now, Nvidia. Is it just an AI bubble? Here's what actually happened. On November 20th, they reported a crushing earning of $57 billion in revenue. $51 billion from data centers just alone, and they're guiding for $65 billion in next quarter. These are record-breaking numbers. But here's the crazy part. The stock just dropped 3.2% anyway. Well, in fact, Nvidia lost $800 billion in market value over the past few weeks, and it's down 11% for November just alone. Same as Microsoft, down 7%. Amazon, same, down 6%. The only big tech winner is Google, which jumped 8% thanks to the new Gemini AI. So why would a company with record-breaking earnings see the stock go down like that? The answer reveals everything about what's happening right now. Ray Dalio, one of the most successful investors, told CNBC that the market is undoubtedly in a bubble. And he's not alone. A Bank of America survey found that more than half of the professional money managers believe that AI stocks are already in a bubble territory. And the problem isn't that AI doesn't work, it's that companies have spent hundreds of billions of dollars building an AI infrastructure, but nobody's seeing a return yet. Think about it. OpenAI is losing money. Most AI startups are burning cash, and big companies like Microsoft and Amazon are spending tens of billions of dollars on chips and data centers with no clear payback timeline. Here's the scary part. Tech stock valuations are now at the same level as we saw during the 2000 dot-com bubble. History says that it doesn't end well. But here's where it gets interesting. While Nvidia was crashing, Walmart jumped 7% in a single day. In fact, some Reddit investors joked that Walmart is carrying the entire S&P 500. Quick question. Have you noticed that groceries are getting more expensive? And you're still going to Walmart? Well, that's why they're crushing it. Walmart just reported $179.5 billion in revenue. That's 5.8% jump. And they raised their guidance for the rest of the year. Their e-commerce sales surged 27%, and their advertising revenue went up by 53%. But here's a key highlight. Walmart processes $6.25 billion per quarter just from SNAP benefits, and that's government food stamps. This tells us that the economy is splitting in two. High-income people who own stocks have been doing great, but everyone else, they're trading down, cooking at home instead of going to restaurants, and flocking to value retailers like Walmart. This isn't a recession signal, it's a shift on where the money is flowing. Now, here's the warning sign that you can't ignore. The VIX, Wall Street's fear gauge, just spiked 50% in November. And for context, the VIX measures how much volatility traders expect in the market. When it's low, everyone's calm. But when it spikes, panic sets in. And right now, it hit 27.8, which is the highest level since the tariff crisis in April. And get this, a 50% monthly jump in the VIX has only happened 11 times in history. And the last time was February 2020 when COVID hit. It jumped 112%. This is rare, and it usually means something big is happening. Why the panic? Well, 3 reasons. First, tech stocks have rallied for 6 straight months, up 42% from April to October, and we're overdue for a breather. Second, valuations got stretched to dot-com bubbles level. And third, nobody knows if the Federal Reserve will cut interest rate in December or keep them high to fight inflation. So what does that mean in simple terms? Well, professional investors are getting nervous and buying protection. And when the pros are scared, regular investors need to pay attention. So, what does it actually all mean for your investments? First, if you're heavily weighted in tech, especially AI stocks, you're highly at risk. That doesn't mean sell everything in a panic. It just means a rebalance. If tech is now at 60% of your portfolio because it ran up so much, well, consider trimming it down to 40% and diversifying. Second, this volatility creates opportunities. It gives you an opportunity to take more risk for higher rewards. Buy the dip. Keep these automatic contributions going. And look beyond just tech. Consumer staples like Walmart, Costco, P&G are all defensive stocks that are working right now. Sometimes boring companies that sells everyday products can outperform the market. Think of it this way. When everybody's buying sports car, well, maybe it's time to invest in companies that sells reliable trucks. Okay, here's exactly what you need to do this week. Step 1. Review your portfolio allocation. If tech is more than 50% of your stocks, you're overly concentrated. Open your brokerage app right now and check, and be honest with yourself. Step 2. Consider going defensive. That means bonds, particularly short-term bonds from Vanguard or Fidelity. When stock sags, bonds usually sag. Even putting 20 to 30% in core bond funds can smooth out the ride. Step 3. Keep your emergency funds topped up. With volatility this high, you want 3 to 6 months of expenses in cash. This would let you avoid panic selling if the market drops further. Step 4. Set up dollar cost averaging if you haven't already. Automate your contributions weekly or monthly, so you're buying consistently regardless of market moves. This is how you beat volatility long term. And pay attention to your emotions. Don't sell at the bottom. Don't sell everything because you're scared. Don't put all your money into one thing because someone said so. Okay, let's wrap this up. The AI bubble might be real, but that doesn't mean it runs for the hills. It means get smart. Remember, Nvidia lost $800 billion while Walmart gained $20 billion. That's not a market crash. It's a rotation. The VIX spiked to 27.8, telling us the volatility is here to stay. And the economy means opportunity exists if you know where to look. And what you should do is diversify, contribute monthly, and don't panic. This is where long-term investors separate themselves from the crowd. If this helped you understand what's really happening in the market right now, hit that like button. It tells YouTube to share this with more people who need to see it. Subscribe so you don't miss the next breakdown when the markets move. And drop a comment. Are you holding your tech stocks or rotating into value? I want to hear your strategy. I'll see you in the next one. Stay smart out there.